The market's just capped off an explosive week with key Mag 7 companies reporting a move in the market, with the likes of Google, Amazon, and Microsoft up each by over 10%. Looking into this week of 8-3, we have some key companies that could also move the markets and potentially impact your portfolio. I'll also show some price projections from analysts from the stock analysis website. Full disclosure, I'm not a financial advisor and this is not financial advice. Please do your own research prior to investing, as this video is for educational purposes. On Monday, Marriott reports earnings this week, and here's what matters before the numbers drop. The big focus is revenue per available room. Because travel demand has stayed strong all summer, investors want to see whether business travel continues recovering or if leisure travel is doing all the heavy lifting. Watch their international segment, especially Europe and Asia. While recovery trends have been uneven, any upside there could push guidance higher. Margins will also be key. Labor costs and renovation expenses have been pressuring hotel operators, so if Marriott shows discipline here, the stock could react positively. Clorox also reports earnings this week, and the big question is whether the company can stabilize after several choppy quarters. The key metric to watch is organic sales, especially in cleaning, household, and lifestyle categories. Volumes have been soft, and investors want to see if Clorox can finally turn that trend around. Margins will also be front and center. Clorox has been dealing with higher manufacturing and logistic costs, plus lingering impacts from past supply chain disruptions. Any improvement in gross margin would be meaningful positive. They also increased their dividend by a penny per quarter, but that is showing signs of fragility compared to cash flow. On Tuesday, McDonald's reports, and the big question is whether the slowdown in U.S. traffic is getting worse or finally stabilizing. The key metric to watch is U.S. same-store sales. They've been soft as low-income consumers push back on higher menu prices. Any signs of improvement would be a major positive. International markets will matter too. Europe and Latin America have been carrying growth, so investors want to see if that momentum continues. Margins are another focus. McDonald's has leaned heavily on pricing and digital ordering to protect profitability, but there's only so much room left. Disney reports earnings on Wednesday, and the spotlight is on whether the company's turnaround is gaining real traction. The key metric to watch is Disney Plus profitability. Investors want to see if streaming losses continue narrowing and whether subscriber growth stabilizes after recent price hikes. Any improvement here will be a major driver. Parks and experiences will be the second big focus. Demand has been strong, but spending trends have cooled slightly. If Disney shows solid per guest spending or strong international park performance, that's a positive signal. Linear TV remains the wild card. Declines are expected, but investors want clarity on restructuring and future strategy. Finally, SanDisk also reports Wednesday, and the focus is entirely on memory pricing and demand recovery. The key metric to watch is NAND pricing. It's been improving across the industry, and investors want to see if SanDisk can capitalize with stronger average selling prices and better mix. Any upside here will be a major driver. Watch the enterprise storage segment too. Hyperscaler demand has been picking up, and if SanDisk shows momentum in high-performance SSDs, it signals a stronger second half of the year. Margins will be critical. Memory companies live and die by cost discipline, so investors want to see if SanDisk can expand gross margin as pricing improves. And finally, Wendy's reports earnings this Friday, and the big question is whether the company can show real momentum after several slow quarters. The key metric to watch is same-store sales, especially in the U.S. Traffic has been soft across fast food, and investors want to see if Wendy's is holding up better than peers or value performer promotions are finally driving improvement. Margins will be another major focus. Beef prices and labor costs have been pressuring profitability, so any sign of cost relief or better operational efficiency could move the stock. Digital loyalty growth matter too. Wendy's has been leaning heavily into mobile ordering and rewards, and strong adoption would support long-term sales stability. Will their earnings give them another mean push? Let me know which earnings you are most excited for, and like and subscribe for more content. Thank you.